closer look at this and the market rout in India and what's being called the largest con in corporate history. I'm joined by Ryan Patel. He's a global business executive, senior fellow with the Drucker School of Management at Claremont Graduate University. Good to see you again. This is perplexing to all of us who follow the markets because this all started with a short selling report from the Hindenburg, and this is the result of it right now. Walk us back 2 weeks ago from this report, the accusations of market manipulation and accounting fraud. They're very, very, very serious. How did the company respond?
Yeah, I mean, I think if I try to break it down in simple terms, right, you've got analysts saying, hey, there is something potentially going wrong here. That's what the report is saying. So that causes a trickle effect to shareholders where, if many are talking about that were being overvalued at some point, it could cause, well, shareholders are going to start to sell because they think the company's worth less money. And so if that's the case, it starts to go downhill. We saw $100 billion difference in market share loss. And then the company responded with a very thorough report about how those allegations are false. So now we're at this point to where one person says another person says another, and then you see that India's market regulator, the Securities Exchange of Board of India, stating that there isn't anything yet going wrong. They're saying they're opening an investigation. But Phil, there is that doubt now, right? Or there's a doubt in shareholders. And I think what Adani needs to do, which I think they're starting to do, is how do you build that back up, right? They had a good earnings report today on one of their companies. They have the big parent company next week. They have the debt coverage. What was the question in the day and the exposure? Could they cover the debt? Seems like they have the cash flow to doing that. And we saw the markets kind of react today, kind of that confidence saying, well, nothing's kind of changed as of today to tomorrow.
Most public companies, whether it's in the U.S. or in Europe or in Asia, they have accounting firms that audit different parts of the companies, specifically the financials. In this case, my understanding is that there were some auditors, but in reading the details of it, a lot of them were new college graduates. I think there was a group of them in a room who were basically putting their stamp on these financials. And what critics would say is that you're not qualified to do the checks and balance for a $10 billion company. In this case, it's one of the biggest or some of the biggest companies in India. Doesn't that draw attention to the fact that, well, what checks and balances should public companies have?
Well, first and foremost, it's about corporate governance. No matter if you're a publicly traded company and a private company that is growing in any kind of sense. And, India, if I take Adani to the side, I think India's made strides about corporate governance and the importance. And what I mean by corporate governance is having the independent director, checking an audit committee, chairing that's differently from the company and checking that aspect. I think for Adani's case, it'll be interesting to see what the fallout here is and why we get more details. Will they be the case study of where corporate governance needed to have a stronger play? And this is where the conversation has to be at. And having that oversight, Bill, as you mentioned, the board is there to do that. Now, I think what I would like to see, obviously, hopefully we get to see, is right. There's a lot of entities underneath the parent company, right? You got the green energy, the power, the total gas. You've even got the marketing services. There's a lot of interconnectedness. So the more that you can see transparency, the easier you can see where, if there was that aspect that you were talking about, where was it and how, if that manipulation occurred, that would be interesting. But obviously we won't see that right now. And it'll be, everyone's going to be paying attention to every earnings report moving forward and under where that money is, where the cash flow is, where it's going to be called.
And the irony, Ryan, is that the Indian stock market was one of the best performing stock markets of late. And then, of course, this report comes out, and one has to question, whenever you hear scandals or you have questions, I mean, I'm going to give them the benefit of the doubt if they're going to launch an investigation, but is it a company-specific issue? Is it an institutional issue with just that one company, or is it systematic? Is it pervasive throughout the Indian economy? And I bring this up because the entire stock market has dropped, not just the Adani companies. So in other words, investors are voting, you know what? I'm not sure about any of these numbers. I'm going to sell now, and we'll figure it out later.
Well, I'm biased here because I have gotten to talk to a lot of the Indian companies, and I know a handful of them that they are doing the right thing. And Adani, why if people are looking at the Indian market, Adani is huge. They're iconic. They're all over the place, so it does have a tie. I don't want to compare it to a U.S. market, but if Apple or somebody there would be some kind of effect. So I think there's a sensitivity to that, and I understand that. But when it comes to questioning the Indian economy or Indian companies, I feel like you just mentioned they were on the rise. They are on the rise. Whatever happened to Adani, I believe, and even the banks are well, the Indian banks are well, it doesn't affect how some other companies do in their business as long as they're doing it the right way and placing the corporate governance. I believe, and I've seen it, that more Indian companies are looking for that corporate governance so they can grab more investments to come in, so they can grow overseas, because they know that that's what is going to take when you now have the #1 populous country in the world. You're going to have more opportunities. You need more of that oversight, as you mentioned, and the transparency aspect. It's clear. If you're an Indian company that's growing, that's the way to grow.
But look, I'm not debating whether or not they're growing or not, but there's a trust issue here, right? And as you pointed out, how do you regain that trust of not just other companies, but investors, and not just in India, but investors from around the world? What's the next step that should be taken? Is it a corporate step or is it a government step?
Well, I think it's a corporate step. I think first step, let's just take Adani, for example. I think their step was, hey, look, we can coverage the leveraged debt. That was the concern from the stakeholders. It was clear that could you cover the debt? It seems like that's the case. So that's one step in the trust to say, we do have the cash flow, we do have the revenues, and then now continue to be transparent. Because this is where you have to be transparent on the outlook. You don't want to mess any of the outlook up and feel that what happens to the trust, if there's a question in trust, no matter what company, if I'm another Indian company, if I'm sitting on the board of an Indian company that's about to release earnings next month, I am going to touch and address what's going on in the market because you are concerned as a stakeholder and address those things, what you're doing to address them. You just can't ignore them. And that trust is going to have to continue to be built step by step. And I think having those protocols in place to reconfirm, if they're already in the place, to remind you as a stakeholder, we do have this in place, or if you don't have them in place, what are you doing about them?
Well, maybe they'll be giving you a call, Ryan, for some help. Ryan Patel, we're going to see what happens next. A very big company with very big implications, not just in India, but around the world. Really appreciate it from Claremont Graduate University. Thank you.